We are stepping into 2026 on the back of what has really been a stupendous 2025, despite all the challenges, despite the US tariffs and the ongoing global uncertainty. Let me just recount for you at least a dozen and more massive and big reform moves. And this is perhaps not fully being captured. The simplification of the goods and services tax, what a massive benefit it has provided to consumption. The New Look Rural Employment Act, and while there is political opposition, remember it proposes to put in more money effectively in the hands of rural workers. Of course, implementation will have to be watched out for. Decriminalization of lots of laws, the Jan Vishwas Bill, the repeal of several dozen outdated laws, and many more are going to come in. Quality control orders that were holding back Indian exports and several sectors, they have been repealed. Look at the reform as far as nuclear power is concerned, the Shanti Bill. The new reforms as far as shipping is concerned to make India a global maritime and shipping manufacturing hub. One could go on and on about many of the key things that have happened in 2025, and with our growth holding up in 2025, it's clear on the back of these reforms and several others that are planned in 2026, India's economy will perhaps be even better. But there are challenges, and the primary challenge will be a resolution of the ongoing trade impasse with the United States of America. That's the big thing that we really have to watch out for. Of course, the budget in February will provide the direction for the rest of the financial year and tell us how India grapples with all the external challenges but keeps its domestic economic momentum up and running.
India enters 2026 playing on a strong economic pitch, but also on a sticky wicket. At the center of the uncertainty are Trump tariffs. 11 months of India-US trade talks have yielded little, and a trade deal remains elusive as the new year begins. Businesses, exporters, workers, investors, and policymakers are all watching closely. Because what happens in these talks could shape jobs, incomes, and prices across India in 2026. India managed 3 trade deals in 2025 with the United Kingdom, Oman, and New Zealand. But Trump tariffs, both reciprocal and punitive, amounting to a whopping 50%, has impacted export-heavy sectors like IT services, textiles, and manufacturing. Many of them major job providers. The pace at which the US is shifting visa goalposts also remains a major concern for all from software hubs to government towns. India drives into 2026 with the GDP growth engines chugging at an incredible 8% in the first half of 2025 to 2026. But the growth bonanza comes with its own cost pressures on the middle class, which remain stubbornly high. The official inflation levels are the multi-year lows, but erratic monsoons and supply gaps have kept food prices high. For many households, the kitchen budget, led by dal, vegetables and staples, is under constant strain. Crude oil prices are currently low thanks to a slowdown in the Chinese economy and the resulting glut in the market. But India's high dependence on imported oil means global tensions directly affect local prices. The continuing tensions with Russia and the American obsession with Venezuela could hit the volatile market, pushing up travel, transport, and household expenses. Fuel costs quietly raise the prices of almost everything we buy. Job creation, according to the analysts, is not keeping pace with the red-hot economy. Jobs are being created, but not fast enough. Despite new government initiatives, many young Indians struggle to find stable, well-paying work, especially outside major cities. Cracks are appearing in the American dream for many, with the Trump administration clamping down on job visas. The Indian consumer is also grappling with a weak rupee as 2025 ends. The Indian currency fell below the 91 to a dollar mark in December, and despite the RBI intervention, remains on a weak wicket, mainly due to trade deal uncertainties and the foreign portfolio outflow from stock markets. A weaker rupee adds pressure to household and corporate budgets, pushing up prices of imports like fuel, electronics and machinery.
To the honourable conveners of the three group of ministers and to all the honourable members.
For policymakers, one of the biggest concerns remain private investment or Capex. While the government continues to spend heavily on roads, railways, ports and infrastructure, many private companies are still hesitant to invest in new factories, offices or large expansion projects. Uneven demand, concerns about profitability are only some of the reasons forcing businesses to delay or downsize investment plans. This also impacts the wage growth and hits small businesses and MSMEs. Also hanging by a thin thread are state finances, with 5 states, Assam, West Bengal, Puducherry, Tamil Nadu and Kerala, headed for assembly elections in 2026. Governments are increasing spending on freebies and subsidies to attract the voters. These schemes put heavy pressure on state finances and increase debt, making less funds available for long-term needs like education, healthcare, roads and jobs. Yet, amid these challenges, the government has laid the groundwork for change. In 2025, the Modi government pushed ahead with major reforms, boosting consumption by lowering GST rates, opening the insurance and pension sectors to foreign investments, opening the nuclear industry to private firms and unifying the country's securities market laws under a single code. All eyes now turn to the Budget 2026 to be announced in February. Households and businesses hope it will ease cost pressures, boost jobs and restore confidence. Bureau Report, Business Today TV.